All right, if you're the class, I like to just type 1 in the comment section. If you can see my face and you can hear my voice, just type 1 in the comment section. I like us to just go straight to the point tonight. Now, if you have been watching the tutorials and you have been learning from what we have been teaching, even if you have not been participating, from this night, you will need to start participating. We are getting deeper now. We're getting into where the core and the real work is. We're getting close to where the real work is, where the real work is. And I don't want you to take this class for granted. Don't take this training for granted. Okay? Don't take this training for granted. I want you to pay attention. I want you to pay attention to what I'll be sharing with you today. So I want you to pay attention. All right. So if you can hear me, just type one in the comment section. All right, so let's continue. Let me share my screen so that I can go straight to the point. Now, when you come to forex markets, there are basically two things that you can do. You can either buy or you are selling. When it comes to forex market, you are either buying the market or you are selling the market. When the market is buying, you should be buying. When the market is selling, you should be selling, because trend is your friend. Trend is your friend. The word trend is your friend is one of the most cautious, instructive statement in trading financial markets. Because as long as you are following, you will always be making profit. Okay? You will always be making profit as long as you are following trends. You always be making profit. And so when the market, you said, is bullish in the forex market, you are either buying or you are selling. The essence of our training, therefore, is to know when to buy and when to sell. You know, this is what we call market analysis. Market analysis. When you know when to buy, when you are trying to find out using data to find out when to buy, you're using data to find out when to sell. That means you are analyzing the market. And then you can do it, technical analysis. This is when you are using your charts, your candlestick charts, to determine when to enter, either buy or sell. But when you use economic data, when you use data released by different countries, departments, ministries, datas, when you're using that data to trade, to determine your entry and exit in the market, and you're using fundamental analysis, So when the market is buying, it is bullish. The word bulls or bullish is from the word, the word bullish or the word bulls or buying. The bulls are those who are buying. When the market is buying, it's called bullish. When the market, those who are making the market to be bullish, they are called bulls. And when the market is selling, it's called bear. These are the names of animals that they just use to determine the market, used as market terms. Excuse me. Bulls is the male cow that has two horns. The bull is a male cow that has two horns. And the horns, and when the bulls want to fight, it uses the horn to carry the prey from down up. It uses the two horn to take it down and carry its prey and leave the prey to the upside. So when the market is moving to the upside, we say it is bullish. It's a bullish market. Now, a bear is a terrible wild animal. Then when it's fighting, it fights with its two ends, it traps the prey to the ground. It pins the prey to the ground to keep control over the prey so that it can eat the prey or kill the prey. So its own is not to pull the prey up like a bull. His own is to pin the prey down to the ground so that it can get control or eat the prey. So now that is where they came about the word bulls and bears. So when the market is going to the top, going up, it is bullish. When the market is going down, when it's selling, it is bearish. Bears, it is bearish. Now, you see, the beautiful thing about trading financial market or trading forex is that you make money when the market is buying. You can make money when the market is selling. In both ways, you can make money. Unlike some when you buy stock, you only make profits when the stock is appreciating, when the market is going to the upside. And even some of those that trade crypto like normal, when they buy the dip and sell high, buy low, sell high, they only make profits when the market is bullish. But you see, when you are trading it in the financial market, whether it's bullish or bearish, whether the stock is, whether the currency is making, is going to the upside, you are making profit, and when it's going to the downside, you are making profit at the same time. So the bulls look like this. Look at the two horns of the bull. When the market is going to the up, it is called bullish, and the direction is bullish, the direction is upside. And when the market is and this is what happened. This is the bullish market. It's a bullish market. How do you know the market is a bullish market? When the market is forming a series of high, when the market is forming a high, look at it now. A high, a low, a high, a low, a high, low, high, low, high, low, high, low, high, low, high, low. When the market is forming high, and the high, the next high is higher than the previous high, and then it's forming lows and lows and lows, and the next low is higher than the previous low. We say that the market is forming series of higher highs and higher lows. It is said to be in an uptrend. I'm still going to explain this deeper to you later. It is said to be in an uptrend. The market is forming an uptrend. The market is forming an uptrend. When it's forming series of higher highs and higher low, it is said to be in an uptrend. So in that kind of market, what do? You are looking for the opportunity to buy, period, nothing more, nothing more. When the market is forming a series of higher highs and higher lows, you are always looking for the opportunity to buy. Look at a market like this. You should never think of selling on this kind of market. You should never think of selling. You should never, ever think of selling this kind of market. You should just think of buying. And then, look at it now. Market is forming high, higher low, 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 higher low. So when the market is looking making series of higher highs and higher lows, so when you see an high and then the next high is higher than the previous high, then you see a low and the next low is higher than the previous low, it is said to be in an uptrend. So the market is forming a series of higher highs and higher lows. It is said to be in an uptrend. Therefore, we will only be looking for opportunities to buy. I'm laying a very strong principle here, especially if you are new to trading forex at all. I'm not teaching you as if you already know anything at all. I'm teaching you as if you know nothing. So that when we get to the place that is very, very deeper, you will have dotted all the I's and crossed all the T in a foundational level. So now when the market is forming higher high and higher low, it is said to be in an uptrend. The market is in an uptrend. Okay? The market is an uptrend. And therefore, we look for opportunities to buy. You'll be looking for opportunities to buy. How do you get this opportunity to buy? Is what we're going to be focusing on in the next series of classes. How do you join the uptrend? When the market is buying, where do you enter? What should be your target? What will you do? How do you do it? It is said to be, how do you do it? What should be your target? What should be your profit target? Where should you put your stop loss? How many pips should you target? That's what we're going to be spending a lot of classes on. So when the market is forming, but I'm establishing this moment that when you see the market is buying, where to join the uptrend, that should be your focus and nothing more. Are we together now? Are we together now? You should be looking to join the buy. Now, let's get to the next slide. So, and then to be bullish. To buy means to long the market. So you are entering a long position. You are going long. All of them means to buy, to go long, to be bullish. To buy, to be bullish, to go long. They are all saying the same thing. They are all saying the same thing. Now the opposite is the case. When the market is going down, when the market is in bearish direction, okay, you see the bear now that the head is down. It always want to press the prey to the downside, to the ground. So when the price is moving down, it is said to be bearish. It is said to be bearish. So when the market is forming series of, now look, so how does the bearish market look like? Look at it. It's just the opposite of bullish market. So when you have the high, the low, 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 the high, the low. Now, each high you see is lower than the previous high, is called the lower high. So this high here is lower than the high here, it's called a lower high. Lower. It is called the lower high. And then this high is lower than this high, it's called the lower high. Then this high is lower than this high, it's called the lower high. Then this is a low, this is a low. This low is lower than this low, it's called the lower low. This low is lower than this low, it's called the lower low. This low is lower than this low, it's called the lower low. So when you market a forming series of lower highs and lower low, it is said to be in a downtrend. It is said to be a bearish market. So it's said to be that the market is selling. So what do? Opportunities to sell. We're looking for the opportunities to sell. So on a downtrend, on a bearish market, you are only looking for opportunity to join the sell. You don't have to bother yourself with buying the market when the market is in a downtrend. You'll be looking for, where do I join the sell? Where am I going to be joining the sell? And that is what you should be concerned about in a downward market. You should be looking for where to join the sell. Okay. Now, let me take you to so this is exactly how it looks like. So when the market is forming higher highs and higher low, it is said to be in an uptrend. When the market is forming lower high and lower low, it is said to be in